Good morning, everyone. My name is Jason Collins, and I'm with URL Insurance Group. I'm an agent support specialist here at URL, specializing in single premium life products. First off, I'd like to thank everyone for taking the time out of your busy schedule to be with us today. Those of you that are currently doing business with URL, I'd like to personally thank you. We understand that there are many options as to where you place your business. That's why we appreciate you working with URL, and we'll promise to continue our dedication to your success. Some of you are new to the URL family. Welcome. URL is a full-service national broker. We provide agents complete support in all of our lines. URL provides single premium life, fixed and indexed annuities, traditional life products, employee benefits, and group health. We also have a senior division that offers MedSup and MedAdvantage solutions. So please take a moment after the webinar to tour our website at www.urlinsgroup.com and discover if there are any additional avenues for URL to assist with your success. Again, the website is www.urlinsgroup.com. Now, I'm extremely excited to be part of presenting this great program for you today. Single premium life has been growing in popularity the past few years. People, and more specifically baby boomers, are realizing that they have cash value in old whole life policies that they don't want to continue to pay into, or they have money that is set aside and earmarked for the next generation, making little or no interest in savings or CDs. Boomers also have major concerns about their future with regards to long-term care or needing a lifetime income. Today, we're going to discuss a brand new option that will help your clients with these concerns. I'm proud to introduce David Enos. David is the Director of Agent Services at GCU. He's here to review single premium life transfer vehicles and annuities that GCU provides. The single premium life generally provides a higher death benefit than most single premium life and GCU member-based annuity benefits. Dave will discuss how each will benefit your clients. Now, before I turn it over to Dave, I'd like to mention, should you have any questions during the broadcast, there is a question box on the right side of your screen that you could type them in, and we'll answer them as they come in. So without further ado, I'd like to turn the program over to Dave.
Good morning, everyone. My name is Dave. Okay, Jace, can you see?
I cannot. There we go. Now I got you.
You got the whole thing?
You got the whole thing, yep.
Okay, perfect. Okay, good to hear. Always worried about these, the tech aspect of this stuff. Again, my name is Dave. I'm here at GCU. I've been in insurance for going on 26 years, but I've been with GCU for just a little over 5. It's my pleasure to talk with you this morning. I know we're allowed for about an hour, but my guess is I'm probably only going to take about a half an hour to go through everything. There's time for questions, and anyone can call me direct afterwards, but I hate to beat a dead horse after half hour, 45 minutes. You know, people's eyes have a tendency to get a little droopy, so I'll try to keep this fairly high level and informational, but there's plenty of time for questions, and you can ask me anything at any time throughout the process. Again, we're GCU. We have been around since 1892. We were originally formed as the Greek Catholic Union, and just in the last few years, we changed our name to GCU because we're not Greek, and you don't have to be Catholic to be a member. We started back in the late 1800s. Russian immigrants came into the country, and they didn't speak the language. They were forced into all of the high-risk jobs, coal miner, working in, scaffolding, 100 stories up. They had a high mortality rate, and generally back in those days, when someone died, then they basically passed the hat. So what happened was back in 1892, the bunch of the different lodges for the Byzantine Catholics basically came together and decided, hey, you know what, if we joined forces, we could probably leverage what little money we've got and make it a benefit for everybody. And that's actually a similar story to several of the fraternal insurance companies that exist. Again, we started back with 743 members and only $600 in assets. And just recently, we just crossed over $2 billion in assets, which isn't a bad growth rate. You can see us that we're represented across the country, all the way from Connecticut down to Florida over to California, and the majority of the states in the middle. We don't have the Northwest yet, but we're getting there. So since we've got, I know that the URL is centered here in Harrisburg and in Pennsylvania, but if you happen to have a non-resident state that's whether Michigan, Georgia, Texas, I don't care. That's fine. We're able to help you out. This is something we work with Standard Analytical. They do a comparison of all the top insurance companies. Again, we're just a little $2 billion fraternal insurance company, but our financials are extraordinarily solid. We're a very conservative-minded company. That's just the way we are. By our charter, we are not allowed to carry any debt, so we're able to actually push a better return back for our members. Officially, we're a member-based society, so everything we do for the benefit of our members. You become a member by buying a policy. So anyone that, whether it be an annuity policy or a life insurance policy, you become a member, and as a member-based society, we try to maximize the benefit for them. The comparison report basically shows where we stand in the average of the 25 leading life companies for solvency, and you can look at all the rest of our financials are right online as well. I'm going to take a look at the annuity products and the life products today. We'll start with the annuities because that's probably the majority of what we do. My background primarily has been life insurance. So one of the things that I try to do is I try to take all the folks that have a tendency to gravitate to annuities and show them the wonders and joys of life insurance. But we'll start with annuities here this morning. We have 5 primary annuities that we work with. The Option A, the 1+4, the Triple Advantage, the 5-Year Advantage, and the Flex 8. Don't worry about memorizing them. We've got all sorts of materials for you to be able to print down, but I'll go through them one at a time. The Option A, well, let me go to this first. Issue age last birthday. So if we say that someone can buy a specific annuity up to age maybe 80 or 85 or 88, that means as long as they're that age and 364 days, they're still that age. So if we say the maximum age on a product is, let's say it's the 5-year, it's age 88. As long as they're 88 and it's the day before they turn 89, that's fine. They're still 88. Again, as a member-based society, we can only have a single annuitant. That is different from most of the commercial insurance companies out there. We don't do joint annuitants, but we may assign ownership. So that comes in handy when you have a trust situation. Some people will go, oh gosh, I've got this trust set up, what can I do? Well, we have to have an actual person, living, breathing person. It can't just be an entity that is our insured, because remember, but that person can then immediately, upon applying for an annuity or a life policy, they can then actually make the owner the assign of the trust. Okay, Option A. Option A right now, with the craziness of the financial situation in the world, I think is probably the easiest thing in the world to sell, and it's pretty rare. The Option A is 100% liquid annuity. That is, you heard me right, it's 100% liquid, day one. We can't use qualified funds, so it can't be an IRA or anything. But for non-qualified money, you can put in $5,000, $10,000, $15,000. You can put it in, you could give it to us for 3 weeks, and they could have it back. No questions asked, no penalty, no surrender charges. It's not a checking account, so they can't just write a check out of it, but our turnaround time is extremely fast, usually 2-3 days. We can have, by the time we receive the money, and stroke a check out and deposit it in the person's account. So that is an easy way for you to get someone's attention. If they're sitting in their checking account, they've got a bunch of money there. You're talking to somebody about their MedSup or whatever financial advice that you're giving them, and we've all seen people that you're thinking, gosh, why do you have $15,000 in your checking account or $30,000 in your checking account? And sometimes it's these folks, they're just scared. They don't know where to put it. They're just terrified. But they're also, what are they making? 0.025%, 0.03%, some ridiculously low percentage in your checking account. It's an insult. If they've got a chunk of change and they don't know where else to go, this is a wonderful place for them to put it into an account. For them to put it into an account, and they don't have to worry about the liquidity factor. They don't have to worry about a surrender charge. They don't have to worry about a time horizon. They don't have to worry about anything. They put it in. Whenever they want it back, they can have it back. You'll see the minimum initial deposit is $5,000. That is correct. We can't do This is the only one that has that minimum of 5,000, and it's because it's 100% liquid. We can't just do like a $300 or $400. We'd probably lose money on every transaction we did at that rate. But as long as they keep $5,000 in or more, we're fine. They can, and I've got people that have got their option A's, they just like having that. They've had it in the option A for years. The fact that it's 100% liquid doesn't mean that people necessarily take it out. It's also a nice introductory annuity for you if someone's going, okay, I don't know what a GCU is. And you say, okay, they used to be the Greek Catholic Union, and your client goes, okay, that doesn't help me at all. And then when you tell them a little about us, you go, listen, they've got something I think you'll like. It's right now, it's that 1.75% minimum rate guarantee is phenomenal in comparison to what a checking account would be. And right now, the current rate on that option A is 2%. So if one of your clients put this in, they'd be making 2% annually on their money. That's 100% liquid, and they can leave anytime. That's a very nice competitive product as an easy camel's nose under the tent sort of way to get them used to GCU. And even 3 months, 6 months from now, you could talk to them and go, listen, what do you think about the product that you've got with GCU? And if they like it, go, you know, they've got other stuff. And you could transfer that money or part of that money out of the option A into something else. So it's just a nice introductory type annuity. The 1+4 is probably my favorite one. As an agent, it doesn't pay as much as the longer term annuities, but it's structured so that it actually pays a trailer, you know, years 1, 2, 3, 4, and 5. It's referred to as a window annuity, meaning there is a 1 month window between months 12 and 13. That's why it's called 1+4. So that first year is 1, and the next 4 years are 4. So it's a 5-year annuity on a 1-year chassis. And so that person could come in, your client could actually take out a 1+4, and after 1 year, they have a 30-day period where they can do whatever they want. They could take their principal and their gain and walk and head home, no surrender charge, no penalty. They could roll it into another 1+4. If they're that sort of person that goes, you know what, I'm trying to time the market, I'm just not sure where I want to go with my money. 1 year's fine, but I don't want to, you know, guarantee 2 or 3 or 4. That's fine. You could have a standing appointment with them, and every year you write them a new 1+4. Just keep rolling the money in. And before you say, well, that would be ridiculous, I have clients that do it. That's their version of laddering their money. But there's people that they like having that security, knowing they've got a 1 year out. After that first year, if they don't do anything with their 1+4, after that 1 month goes by, then it automatically jumps up. No effort on their part. It automatically jumps up to whatever our 5-year annuity rate is. Currently, our 5-year annuity rate is going off at 2.8. So, and the 1+4 right now is 2.25. So if you wrote a 1+4 for one of your clients today, they'd be getting 2.25. 1 year from now, if the rates didn't change, and they probably are going to, but if they didn't, then next year, after that 1 month, they would automatically jump up from 2.25 up to 2.8. No effort on their part. So again, it's all about versatility and options for them. They can do nothing. They can switch over to another 1+4. They can switch it into a different product altogether. It doesn't matter. Or they could take their bat and ball and go home. Triple Advantage Plus is a MYGA, a multi-year guaranteed annuity. It is our only MYGA in the portfolio, and it's, as you might guess from the word triple, it's a 3-year annuity. It is level all 3 years. No adjustments, no fluctuations, no changes. It goes in at whatever the rate is, and it's guaranteed to stay there for all 3 years. Currently, the Triple Advantage is going at 2.4. That means that if you think that the rates are going to continue to go down, then locking it at 2.4 is a great idea. If your client thinks that the rates are going to go up, then locking it at 2.4 is not a great idea. It really depends on the perception and the belief of the client. If they would like to guarantee that rate in a decreasing rate environment, then it's fantastic. Really is up to them. But yeah, they have to understand that there are surrender charges for all 3 years during the policy. Once it's out of the 3-year surrender charge period, their money and their gain is theirs to do whatever they want to. Just like everything else, it's got the minimum 1.75% minimum rate in there. And as I said, right now, the triple is going at 2.4. The 5-year Advantage is a neat one. There is an age requirement of 88 for the 5-year Advantage, and I'll tell you that probably half of the business that we write for annuities is probably in the Flex 8 year that pays the highest percentage to the clients. It pays the highest commission to the agents. People don't mind generally locking their money up for that period because they want to maximize their benefits. However, the majority of the people that go with the 5-year versus the 8-year, they usually do it for 2 reasons. Either they don't age qualify because they're over 85, or they want liquidity. The 5-year advantage has a 20%, 10% in year 1, but years 2, 3, 4, and 5, there is a 20% free withdrawal provision. So they can take 20% of whatever the actual starting amount is, and they're fine. And that's every single year. Now, after the first 2 years, the rate is going to be whatever the current 5-year is, but it won't go below 1.75. Okay? Flex 8, as I mentioned earlier, is our most popular annuity because it's got the highest rate, pays the most commission, has the best rate for the client, etc. Currently, right now, the 8-year is going off at 3.25. The guaranteed minimum rate is 2.25, which is higher than most. Most of the interest rates that you'll see for guaranteeds are somewhere in that 1% range, sometimes 1.25. I've seen as high as 2. Generally, you don't see any higher than 2, so 2.25 is probably one of the highest floors, if not the highest floor you're going to see for a fixed deferred annuity. I probably should have mentioned this before. These are not indexed annuities. We don't do anything indexed, variable. You don't need securities license. You don't need a Series 6, a Series 7. You don't need any of that. Fixed deferred annuities. They're very predictable, very basic, and even though there's some unique aspects to it, they're not a complicated product. It's really fairly easy to explain these to your client. And really, that's what our job is. Our job is to try to make the incomprehensible and scary stuff of financial to make it easy and digestible and understandable for our clients. And when, I sold for years, and I tell every single client I ever had, my job is to make your life better from my having been there, and to make all these questions you have and answer all of them. So when I walk out the door, you totally understand what you have and why. This is an easy product to understand. Maximum deposit is $1 million. I will tell you that we've taken more than $1 million in this product on more than one occasion. So if you have someone that's got 7 figures and they would like to find a nice home for it, the fact that we have $1 million maximum, and quite honestly, any maximum that we have in any of our products, if you have a situation where you've got you want to put $300,000 into a 1+4, call me. Call me, drop me a text, send me an email, something. Get a hold of me because I will do everything in my power to make it happen. We do exceptions a lot, but we have to have the maximums in there so that the exceptions are on a case-by-case basis. Okay, I know this is near and dear to Jason's heart. We're going over to the life insurance. We have 3 products, primary products, without going into the term insurance. I'll touch on that here in a minute. But our whole life portfolio is new for us, which makes me very happy. Because up for the first 3 years I was here, we still had some fairly old and I thought rather boring products, but now they're not. Our 2 primary products are Legacy Protector and Legacy Advantage. The Legacy Protector is a single premium whole life. The Legacy Advantage is either an ordinary whole life or a 20-pay ordinary whole life. We also have an Irrevocable Life Insurance Burial Trust, which is really just a use of any of the legacy products. And I'll go through them here in order. The Legacy Advantage series, you'll see on the left-hand side, Legacy Advantage 20, and Legacy Protector, all ordinary whole life. The single premium, the Legacy Protector, most of the time when you talk about single premium policies or single premium life, most of the time, not all, you won't see the acronym SPWL, you'll see just SPL, single premium life. And that's because they're a modified universal life policy. The advantage is that they can usually push more face amount into it. The disadvantage is that they can't put in as much cash value because it's not on a whole life chassis, it's on a universal life chassis. So The Legacy Protector is an actual single premium whole life product. Legacy Advantage and Legacy Advantage 20, now they write up to 85 for the ordinary whole life, the Legacy Advantage, and up to age 80 for the 20 pay. Maximum deposit premium is $150,000 without prior home office approval. I will tell you, we have accepted over $1 million. So again, it's another one of those cases. The fact that we have a maximum of $150,000 without approval doesn't mean you shouldn't ask for approval. Please call me. On the right-hand side, you'll see the Family Guard series, our 10, 20, and 30-year term. Those are all changing here in the almost immediate future. We've already filed with them, been accepted. We've refiled all of the rating, all of the premiums, etc. So that whole term package is changing just in the next few weeks. We're in the process of actually doing all of our marketing materials and programming the computer. So within the next 3 weeks or so, maybe even 4, you'll see a whole new term insurance portfolio come from us. The Irrevocable Burial Trust is, I think, a very unique aspect. It's probably one of the only ones out there. Settlers used to have one, and they don't offer it anymore because I don't think they're around anymore. And so our IBT is one of the only ones you're going to see in the marketplace. The Irrevocable Life Insurance Burial Trust is a way for people to avoid the 5-year look back, to help qualify for Medicaid spend down, and take life insurance, put their life insurance in place so that they don't have anything in their name. So basically, you could take a life insurance policy, and every state's got a maximum. Most states are around $15,000. Some states are at 10. States like Connecticut have 8,000. But you can write up to, generally in Pennsylvania, up to $15,000 for life insurance. You can then actually make, and you can, based on your insured, but what you do is with the IBT, you make the owner and the beneficiary the trust in that person's name. What that does is that immediately transfers that life insurance policy out of the person's estate and into the trust. So they can have a whole life policy that's either a single premium or a multi-pay, doesn't matter. And they can get the benefits of that life insurance without having to worry about having that calculated into their metric for qualifying for Medicaid spend down. It doesn't have to wait for the 5 years. It immediately avoids the 5-year look back. That's really neat, because you can actually, if you're going to be talking to somebody about, and I know a lot of you folks do Med Advantage, Med Supplements, etc. So you're already getting most of the information, and you already know if this person is looking for, be a candidate for Medicaid spend down, or if it's even a concern. And this is just a nice, easy way for you to go, you know what, I can actually take care of your life insurance, and this won't even be factored into your Medicaid spend down calculus down the road. And by the way, it's also completely affordable. It's not tied to a specific funeral home. It's not tied to a specific state. If they're in Pennsylvania and then they want to get buried in Oklahoma, that's fine. They're not, as I mentioned before, assets in an IBT are not considered countable assets by Medicaid. You can prepay the funeral without choosing a specific home, and has an immediate tax-free growth. The biggest thing is that most of your clients are trying to look for a home, and they're looking for these solutions, they're looking for answers, and they already trust you. That's why they're already doing business with you. This is an easy question to ask. Our illustration software is, and I keep hearing this from our agents, it's very easy to understand. It's a piece of cake to download. You don't have to be highly intuitive in order to figure out how to use it. You can look at the whole life, the term life, and the annuity pages. I'm colorblind, but I've been told that that's red, yellow, and green. And when you click on the one, you click on the whole life, just like this is here, you'll see Legacy Advantage 20, Legacy Protector, and the Burial Trust Program. You pop the information in, price pops up. If you hit full report up at the top, the PDF for the whole illustration pops up for you. Very easy to do. It probably takes you 10 seconds to understand it, if that. We also, what I don't have in this is we've just recently, because because this doesn't work on your smartphone really super well. So we actually have an online version that doesn't give you the PDF for the illustration, but it gives you all of the pricing. So we actually, as soon as you become appointed, we shoot the link of that over to you, and so you can use it on your iPad or your smartphone. So if you're talking to someone about Med Advantage, Med Supplement, whatever you happen to be doing, and you mention life insurance to them or an annuity, and they go, oh yeah, well, how much would that be? You can just grab your smartphone, a couple of clicks, you've got the price, you can show it to them right there, and then you can ascertain whether this is something that they're interested in or not. But you don't have to worry about saying, well, let me go back to the office, let me, fire up my computer, I'll tell you what's going on, I can give you a call back. No, you can answer that question right then and there and find out if you've got an additional prospect or not. That's the basics. I will go back, and because I know that Jason had mentioned, I know single premium whole life is really important to him. One thing that we do a lot of is people that have got a bunch of money with in their name. I normally see either a widow or widower, and it's a case we've done multiple times. And because wealth transfer is something it's a great idea, but people don't think about it often enough. One huge use of our single premium whole life is people in a wealth transfer situation where they had, and this actually is personal to me, my mother died when she was, somewhat young, right after my father retired. And, my father had set up all of his money to be able to take care of the two of them for the next, 30 years, 40 years. And all of a sudden, at age 60, she's gone. So he's got more money than he knows what to do with, literally. So single premium whole life wealth transfer was a wonderful idea for him to maximize money that he was intending to basically pass off to us anyway. And if you think about the tax situation, and I'll transfer it up here to Pennsylvania, even though he doesn't live up here, if the taxation when you inherit, whether it be an annuity or whatever money is coming to you from parents, you've got your income that you're going to be worried about, because now you've got to pay your own income taxes on the money. And in Pennsylvania, you have the extra 10% inheritance tax. So if someone's leaving you $1 million, you're going to, deduct out your income plus another 10%. So do you want to have, out of $1 million, do you want to get $650,000, or do you want to take that same $1 million, put it into a single premium whole life, and leverage it to 1.3, 1.4, 1.5? That would be, so what do you want to leave the kid? You can ask your client, what do you want to leave the kids? You want to leave them, you've got $1 million. You're not going to leave them $1 million. You're going to leave them about 600,000, maybe 650. Do you want to leave them 650? Or do you want to leave them, 1.3, 1.4? That's a very, very easy sale. Even though we will only accept 150,000 without approval, again, just call me, we'll push it through. We've got them on the books. We're happy to do it. They're going to have to jump through a few more hoops, obviously, because we're looking at $1 million, but we will do it. Now, if they're insulin dependent diabetic with COPD, okay, we're probably not going to do that. But we do have what I look at as fairly liberal underwriting, and we actively try to place business. So, again, please just ask the question. Okay, I've kept my word. I'm right in that range. Jason, do you have any questions that you want to pop to, or does anyone else raise their hands?
Yeah, no, there's no questions. That tells me that you did a fantastic job explaining everything, Dave. So,
well, do me a favor and let everyone know my direct line here. I'm around questions. I get questions all during the day and even at night. So it's my cell phone, and if someone's calling me at 7 o'clock at night, I will assume it's for a serious question. They're just not bored. But if I want to be available if they're in a situation where they're with a client and they need to have a piece of information, the person's not sure what to, who GCU is, or they want to talk with, someone, one of the directors from the company, they can call me. Throw me on speakerphone for 2 minutes, and that's an easy way to do it.
Question did pop up here, Dave.
Go ahead, buddy.
Can a business entity purchase one of the annuities?
A business entity can be. It depends what the business entity is. I've seen trusts and associations. So it can't be like a company, but I've seen trusts and associations where they have an individual has to be the applicant, has to be the annuitant, but then the annuitant can transfer the ownership over to an entity.
Okay. I hope that answers your question, Lucio.
And then if she has a specific situation, all she has to do is call me and I'll run it up the flagpole. We try to make it fit, but since we're a member-based society, it always has to be an actual person being the initial either insured or annuitant before we transfer.
Okay, so I got another question here from Thomas. What are the loan rules for the whole life?
The loan rules right now are actually being changed. Right now, the loan rules for the whole life, there's an 8% loan charge, which I despise. So I am actively trying to knock it down to 6. That's just where it is, and I think it's too high. So and I've got the ear of the vice president, so I'm trying to knock it down.
Okay. Any other questions out there? Oh, I do have another one here. Let me read this here. So any compliance approved marketing piece, they would like to get place an ad in the local paper. So where would they find any sort of marketing pieces that they could place in the
generally speaking, to the market, yeah. I have a couple pieces that don't mention GCU, because anytime that you mention GCU for us, then we have to have it right. You have to have compliance in there, and there's a lot of the excessive verbiage, which takes away the impact. So generally speaking, what I do is I try to say, listen, why don't you just include some of the things that we have as far as a rate? Say, my clients have access to rates as high as, or life insurance options that include something like that, because then you don't have to worry about our verbiage. I have a couple pieces that we use. I can honestly tell you, again, we're a wholesaler, we're an insurance company. We're not a fantastic marketing company. We're just not. That's why we have independent agents. But I've got a couple pieces that I'm willing to share. And then if they have specific ideas, I've seen people put ads in the newspaper, in church bulletins, and I've got different pieces that I've used.
Okay. I think that is it, Dave. You did a great job. Extremely informative. So I want to thank everyone for joining your presentation today. Please feel free to call us at URL, for all the single premium life and annuity needs. Should it be brochures, illustrations, or simply answers to your questions. If more questions pop up, please reach out to ourselves here at URL or Dave at GCU. So our toll-free number here is 1-800-926-8875. My name is Jason Collins. I'm at extension 156. You can also ask for Joe Corio. He's at extension 111. Maria Adams is at extension 102, and Cody Wilbert is at extension 136. So I want to, again, thank everybody for joining us today, and happy selling. Take care. Bye-bye.